So right now I'm just going to do like two videos in one cause the interconnected or something like that. Now here's the rule of law. Guess in this, I'm just trying to find the best way I can explain this. So I'm just trying to find the best way that I can explain this. So the reason why we look at the setups, we are trying to identify the entry levels, or we're trying to identify time frames or SNR levels we can play from, or we can take our trades from, or entry zones. So here's an example of what I'm trying to say. Here we have a what? Higher time frame. So look at this higher time frame. We look at the storyline. Middle time frame, this is where we take our plays or entries. Then lower time frame, you're going to be looking for confirmed storyline, and you're going to be looking for a setup. So why do we look at the setups? So we look at the setups to filter out entry levels that are going to actually be traps in the market, or we're trying to identify areas that are going to give us high probability. So sorry, so if you're going to be looking at the weekly time frame storyline, so for example, as you can see here, we were bullish right here. So we are playing from what? We are going to be playing from daily time frame storylines, just like this. Daily time frame right here, daily time frame entry levels, daily time frame entry level, daily time frame entry level, and another daily time frame entry level. So you could have actually capitalized on buys right here, buys again right here, buys to the upside, buys until you reach to the next weekly time frame key level. But now we want to filter out levels just like this one right here. We want to filter out a level just like this one right here. We want to filter out levels that are going to give us some good, that are not going to give us some good reactions. Here, the way we're going to filter out these levels, very good, very good. That's why I'm in love with the market. That's why I'm in love with with the process of learning and trying to understand what's going on in the market. It's just because you would identify levels just like this right here. Look at the liquidity cycle. This is what? Transactional liquidity. This is what? This is endorsement liquidity. What you can do, you can see that here we have a what? Break of structure to the upside. We have a sell to buy range to the upside right here. What do we have right here? We do have a what? We do have a what? A MSU type 1 right here. We do have MSU type 1. So as we have MSU type 1, so there's a high probability that the market would want to sweep this low, then start buying. So which means you're going to filter out this level right here. Going to filter out that level. Then what do we see again right here? We see that we have MSU what? We have sweep of this transactional liquidity. I'm not going to explain a lot of about the setups, because you do have like the videos of the MSU setups and the APA plus the red pullback. So this is just the same thing applies right here. So what do we have right here? We see that the market gives us MSU type 1 plus a direct pullback, as you can see, direct pullback right here to the downside. What are we reaching for? We are reaching for the 50% of the range right here. We are reaching for the 50% of the range, as you can see. We reach for the 50% of the range. As we have reached for this 50% of the range, we identify the SNR level that is close in proximity with what? With this level right here. I was going to identify, especially from my side, I would have identified this one, waited for some reactions right here, and capitalized on this buys going to the upside, which means that we're filtering out this point right here and this one right here. But as you can see, this is the level that gave us some reaction. So let me just not take it out. Then here you can see that buy opportunities to the upside. Then most definitely we can see that here we do have what? We do have a sweep of this level right here. We have a sweep of this level right here. The reason why I'm saying that, let's see if the market reacted from this point. So we can see that here we have inefficiency that was created right here. We have inefficiency that was created right here. So the SNR level that I could have even identified from my side would be this one for some buy reactions, high probability area, where I'm going to take this buys going to the upside. So with that mindset, which means that this, I was going to filter it out, even though I can see that there were some reactions occurring at that point right there. But I was going to filter this one out right there and waited for some reactions from here. So what actually happens is just very simple. This plays right here. We're trying to identify levels where you can buy from, but we're trying to identify the high probability plays, areas that are going to give us moves like this right here. Huge moves like this, good moves like that. When then we use the lower time frame or the setups that we know from the liquidity cycle to actually give us what higher probability entry levels or play levels. So we can even go to what? We can even go to, let's just go to another pair. Do like this. You know what we do at the higher time frame? Weekly time frame. Weekly time frame, let's just look at this one right here. Weekly time frame. Weekly time frame, we have our next candle. We know that we had our break of structures and so forth. Now, this tells us that we are going to be looking to sell at the 4 hour, at the daily time frame entry levels. So from here, we're going to anticipate to see some plays occurring at this point, or occurring at this point right here, occurring at this point going to the downside. But which one are you going to be choosing? That's when we get to what? So for example, like this one right here, and this one was a good entry level too, and this one is a good entry level too. But you can see that you have many areas where you can even take your sales. But now go to your what? Internal structure. Just do like this. So the most important one, if you're going to be looking like at a couple of pairs, I would suggest that you only look at MSU tab 1. Only look at MSU tab 1. So because this is the one that's going to give you high probability. So if you see an MSU tab 1 right here, then it's very easy for you to even identify what that this is not going to be significant. This one is not going to be significant. I'm going to see some reactions just up above right there. As you can see, we are filtering out. So the a lower time frame is used to confirm a storyline or to give us actually help us filter SNR levels that are not going to give us some good reactions. Now let's just go to another pair. Another pair. We go to the weekly time frame again. Let's look at this one right here. Look at this one right here. So we are looking for buys, and the next one is just right here. So from here now, we are looking for buys in every level, just like this one right here. We are looking for buys. This one right here, we are looking for buys. This one right here, we are looking for buys. This level right here, we are looking for buys. Right here, we are looking for buys. This level right here, we are looking for buys. And this level right here, we're looking for buys. Every level on the daily time frame until the market reaches the what? Until the market reaches a target. So for example, let me just put it like this. So right here, until the market reaches this target right here, we are looking for buys. So we are looking for buys. So we're playing from the daily time frame level. So that's the I'm going to be the only person who's going to tell you this. And I know that there's nobody who has this knowledge because I'm using algo trading and I'm mixing it up with SNR. So this is where algo trading comes to play. So algo trading is going to come to play to filter out levels that are not going to give you good reactions. So if we're going to go to the 4 hour time frame, so this is a level that we could have looked for buy opportunities. But what do we see? We see that here we do have like this transactional liquidity. We do have this inefficiency right here that was created. Was it inefficiency? No, it wasn't inefficiency. So we do have this inducement right here. And as I told you, the high probability was going to be MSU type 1 setup. MSU type 1, we look for buys. But now, as you can see, we're going to filter this one out. Then this is going to be your entry level, and this one is going to be your entry level. So you're going to be looking for buyers right here, and you're going to be looking for buyers right here. So same thing applies right here. You see what? Transactional liquidity. We see transactional liquidity. We see inducement right here. Then we are looking for buys from here going to the upside. Then you see what? Sweep of this high, sweep of this low. So we're looking for buys right here. MSU type 1, we are looking for buys from here going to the upside, reaching for that target. So this lower time frame helps us to filter out this what? These are SNR level that are not going to give us good reactions. There are some points where you see that the market is going to move without even giving you an opportunity, even if you filter them out. It's not there. There's no problem with that. You're going to be looking for another opportunity. Daily time frame again. Let me just show you something. Now, the most important thing that you should understand, as I told you, the types of what? Of entry levels that we're going to be looking at. The ones that have high probability are the ones just are going to be like this. When you look at the line chart, it's something like this. It's going to be an A or a V. And clearly, after you've identified what? After you have identified your setup right here. So for example, if you see something like this, so there's going to be your entry level just like this. There's going to be your entry level 2 just like this. Then here, you definitely know that in your lower time frame, you have something like this. So it's going to be your lower time frame. Then right here, this is going to be your lower time frame again. So it's going to be something like this. Lower time frame again, just like this. So let me just do like this. Let me just do like this. So this one is your higher middle time frame, and this one is going to be your lower time frame. So using the lower time frame to filter out these levels right here. And you can see we saw that here this was a what? This was a resistance right here. This was a resistance that was broken. Now it becomes support. So you could have capitalized on this move right here a little bit to the upside. But now as you can see here, you see the market reaching for the what? This demand level right here. So daily demand, then you look for your buys to the upside. Then again, somewhere right here, this would have been a great demand right here. A great demand level. So let me just show you an example with the what? Let me just show you an example with the daily time frame, because I've been looking at the weekly a lot. So with the daily time frame, you see, you confirm your storyline and so forth. So we can see that here we now have a what? We now have a bullish storyline here, bullish storyline, and something applies here. It was bullish right here. Yeah, so yeah, bullish storyline from here. So what are we looking for? We understand that the market is going to buy from this level, every level that you can see right here, until the market gives us something like this one right here, this next candle right here. We are buying, we're looking for buy. So we're playing with the what? We're going to be playing with the 4-hour time frame, playing with the 4-hour time frame. So from here now, we are looking for buys. So from here, this is a 4-hour buy level. This is a 4-hour buy level. This is a 4-hour buy level. This is a 4-hour buy level right here. Just let me just zoom in a little bit. This is a 4-hour buy level. This one too. So everything that you can see right here, you can see that we have a lot. And then as you can see, the more you go to your lower time frames, you realize that there are a lot of levels that we can play with right here. A lot of levels like just like this one right here. A lot of levels to the upside right here. But now you can see that there are levels just like this one. Didn't see some good reactions. This one right here. this one right here, this one right here. There are a lot of levels, as you can see. There are many levels that you could have played from. So also this one right here. So what you're going to do, go to your H1 time frame. So you're going to presume that the storyline has been confirmed. You have all of our confluences and so forth. Now, what you're going to do, you can see that here, this is what sweep of this high right here. So what are we looking at? So we're going to be looking for buys. With this one, high probability, as I told you, is going to be at this flow right here. So something like this, might even take it out. This one right here. So entry level. This one, let me see. Okay, this one is out too. As you can see, I've filtered out. So you could have actually got like a couple of losses, 3 to 4 losses and so forth. More than that, but now as you can see here, you could have actually got like 2 or 3 losses, actually 2 losses that would have capitalized on this buys going to the upside. And as you can see, it has losses like every strategy. Then here now you can also use it to identify these levels, okay? The right pullback right here, 50% of the range. Then you can even take this one out because not at the 50%. You can even wait for some buy reactions from there. Then here you can see that this is a direct pullback right here. So which means that you're going to be taking this one out, going to be looking at the 50% of the range. So direct pullback again. So the direct pullback, if you have a direct pullback, just identify the lowest one. So you can see here, this was a direct pullback, but you don't see the market reaching for the what? For the 50%. And as you can see, looking at that same example that we talked about right there previously. So you can see that right here we have 2 levels that we can even consider. Okay, it wasn't even a direct pullback because it was something to the upside. So let me just take it out, but let's just presume that this was a direct pullback. Here you're going to be taking the lowest one that you can identify, the lowest one that you can identify. You can even take the entry from there, but just know that it's not high probability. Then again, here you see what? You see the sweep of this high, you see the inducement. So we're not going to be considering this one here. Not going to be considering this one right here. You can even take your buys from there to the upside. So as you can see, algo trading is helping us to filter out the plays that are not going to be high probability, are not going to be high probability. So I guess like we're done with this one. So simple. Look at your liquidity cycle setups, your algo trading setups that are going to help you to get to a point where you can filter out what you can filter out the levels that are not going to give you good reactions. But if you feel like it's a lot of work, what you can just do is just do something very simple. Look for levels just like this. Look for levels like this as you're starting. Look for levels like this or like this in your play time frame then look for something like this. Look for something like this. So break of structure, something like this. You have an inducement, sweep of an inducement, then you take yourselves to the downside. So just look for something like this. This one is going to give you some good high probability setup, because if you're going to be looking at this level, sometimes it's going to be hard for you to even catch a level like this. It's going to be hard for you to even catch a level like this. But if you do understand and spend a lot of time in the market and so forth, you would identify and notice that here, these levels are going to give you some good reactions. So you can use this one to filter out, and also you can see that you're going to miss trades like this one right here, going to be missing trades like this one, but you can capitalize on this opportunity to the upside. Then again here, capitalize on this opportunity to the upside. So basically, look for the V's or the A's in your middle time frame. Then look in your small time frames, look for MSU type 1. So it's going to be simple. It's going to be simple. I guess like with that one, it's going to be simple. So middle time frame, look for your V's and A's. Break and retest is okay. Don't look at your open close candlesticks right here. Don't look at the open close candlesticks. Then in your internal or your lowest time frames, look for MSU type 1. Don't look for direct pullbacks and so forth. MSU type 1, simple. You can create a good trading plan from that. Yes. Done with this one. So let me just record another video just right now.